Hi, Warriors. Big week with the Fed. I'd say that 90% of people are waiting to react after the Fed, thinking that, they're going to be able to see everything's going to go up after the Fed cut. I think the tough trade is to be in those positions before the Fed. I'm looking for a hawkish cut. So I think the market's going to be disappointed with that. They've gone pretty far ahead of themselves in the dot plot. So that's just a guess, right?
Well,
That's
remember
what I
we're gonna have a new Stephen
Fed.
Moran
Yeah.
who's and he's gonna throw out a 50. There's no doubt in my mind.
Okay.
So I think that's gonna be really interesting. And I know Ryan and Kman were talking about, what happens with Lisa Cook, and yeah, it's gonna be a really
Yeah.
interesting
It, it
FOMC
turns
meeting.
it turns out she did list that as a vacation home.
Now,
That's what
guys,
I read. Huh? That
guys,
second? Yeah.
Trump's just reported that subject to SEC approval, companies and corps should no longer be forced to report on a quarterly basis, but to
Wow.
report on a 6-month basis. So,
That
yeah,
would change
that
things.
can shake things up a bit.
To keep things in the dark longer. Wonder why. And why is that his purview?
Well, he's saying China do it. They have a
Oh,
50 to 100-year view on a management of a company.
okay. All right. Well,
Oh, then
we'll
we
see.
should
We'll
just be
see.
paying our executives that much more for that much longer, right?
Yeah,
Yep.
there's less accountability, I would say,
Yeah,
for
yeah.
doing
I
that,
mean,
right?
yeah, you know,
Anyway, all right.
that's
So there's always he's saying something every day. Anyway, the dollar is weaker today, coming in weaker, smelling the cut. Still short Canada. Grega liked this 78% rejection in Canada. Uh, Yen still looks like, maybe we'll go for these lows again. And Euro, let's see what it does above 80 in the next day or so. I'm going to be looking to buy the dollar, not at new lows, but at about the 97 level. If I have some nice divergence down here, whether it happens before or after the Fed. Just one more thing on the throw over with the S&Ps. Um, they're going for new highs, but check out the 1 hour. Um, okay. At new highs over 6,000, we're going to have a little three drive here that's setting up. Be careful if S&Ps get back inside the wedge. It's not that far away. It's 25 handles away. That reactivates the wedge. And metals pretty quiet, energy pretty quiet. So seems like the whole world is waiting for what Powell's going to do. Why don't I start out with EG under pressure as the pound is outperforming? The pound has made new recovery highs here without the euro, right? So, this was what, 1780? Maybe we go for 1780 without taking out 1830. We'll see. And let me go to Ryan. So going into the Fed, do you kind of feel that way that we might get some type of hawkish cut? That he's going to give the market a quarter, but he's going to sound still data dependent for further cuts, something like that.
Yeah, I can see the case for that. We've got 100 different permutations for this one.
Oh, okay.
The thing is, those jobs numbers, okay, they don't want to get behind the curve again, like they did with inflation. So I think that they're going to take the middle of the road. I still think, signaling, do a cut on Wednesday, signal another one or two, and then another two or three next year. I think that's the sort of middle ground I'm looking at. Yeah, could he still be worried about the inflation side of things? Yes, but he said that at Jackson Hole, Labour's the priority at the moment, and we've got to side with what Powell says, because despite them cocking up over inflation, he's been pretty much bang on it all the way through since. So yeah, the market we know is leaning dovish. So anything it doesn't get as much as it wants, then yeah, you're going to see it's going to be called hawkish, and you're going to see dollar and yields rally.
Okay, it's great that we're going to have Fed Guide 12, Joseph Wang here tomorrow to get his feedback. I got
good.
That's amazing.
Yeah, well, good timing, huh? Serendipity.
Yeah, great.
And I just read a piece from him, which, I think he's a great analyst when it comes to the Fed, and he's saying that the market's ahead of itself on cuts. So, I mean, he's looking for a cut, but I think he thinks there's going to be an adjustment in the dot plots after the meeting. Too soon, too fast, I think was a heading. And I don't know if you guys could check it out, but with S&Ps at all-time highs, it's very rare to go into interest rate cutting cycle when you don't have to, based upon like an emergency of the market like they've done in the past with the market collapsing. All right, but with the market up here, I think it's only happened maybe less than a handful of times in the history of the market. It's very unusual. So, for those of you who are, statistic people, that'd be good to know. I did hear from someone that when they do it, a year from then, the market's higher. But I mean, but what about in between? That's what I'm thinking. All right, a year later, how you put a trade on knowing it's going to be higher next year, but in the interim could have a 15% correction or so. Anyway, that's going to be great to talk to him. Pound's getting a lift. You looking for more continuation here, Ryan?
I hope so, because I'm in with a buy stop at 136.10 because it looked like as sure as the nose of your face it was going to break 136 this morning. Not really, it hasn't really kicked on that much, but it's it's broken the level that it sat below for the last 2 months, and we're off and running, and that could see euro sterling edging down to 86. But euro, it's sort of trying to keep up. It's broken 117.50. If it holds that, then you might get your levels. But euro sterling, if the pound does accelerate away, if cable accelerates away, we could see a move down to 86. But that will be more of a speed move than a fundamental move. So I'd probably add a bit more into my euro sterling longs down there.
Okay, highest conviction trade going into the Fed.
Highest conviction trade. I've got a few. Dollar MEX. That's looking good for the break. This one's been, waiting 2 months to see what happens with this one. Big level break, 1850, and technically it's perfection. It broke, it's held the break, and now it's moving lower. You can't ask for more in a trade.
Yeah. Plus, unless it reverses, it's confirming.
Yeah. And I've been sitting in this one since March.
Oh my God.
Another lifestyle trade.
You're something else, man. You're like a stock investor in FX. You're a portfolio manager in stocks. All right. Well, good to talk to you this morning, buddy.
You too, mate.
Thank you, man. Bring Kman in. Good morning, Kman. How are you?
Morning, Dale. Morning, everybody.
Good. So last week, I believe you were saying that if we had some kind of break in the yen, that you might be looking to buy the yen on weakness. Is my memory serving me?
It is correct, but we haven't had any.
Right.
If you look at the yen crosses, they are still bid. So we haven't seen a break of any kind of sort.
Were you thinking down here, like if we retested the range again? Was that what you had in mind?
Yeah, but I've also said that I was rather doing yen crosses than dollar yen,
Okay.
because I
Okay.
think we're
Okay.
we're in a range, and for as long as we don't know who the real front runner is into those elections, I would assume that it will be Takahashi, that is going to keep the yen crosses supported, I think. So if we see a dollar reversal, I think dollar yen could be one that climbs quite rapidly. But so far, I mean, it's in the range, and the yen crosses are doing all the work.
Okay, I do have to touch upon yields
Mm,
because we did get to 4
yeah.
with some divergence and a little bit of a bounce, not a bad
Mm.
bounce. I'm not expecting a lot beneath 4 if on the Fed
Um,
on the notes. Are you?
no, because I think the market already traded it.
This
What
was the Fed cut that is already in the market.
and
This,
yeah, and a bit of rulings against tariffs and all that stuff. And people probably short bonds and needing to buy back because the emphasis went on to the employment. So yeah, I think into the Fed, unless we get anything shocking new, the ultra weak retail sales, for instance, I don't see why we should trade this one particularly much lower, especially if they give us 25.
yeah,
Then why? Especially not the tens and the longer term. I think we will have to look more to the short term yields if they change their rate path to be steeper to get to 3% neutral rate, which I think they will keep. But I mean, the neutral equals expected long-term rate. Okay, I mean, because there's a bit of discussion about what is which, but no, I say if they keep their long-term expectations around 3%, the path may just be steeper, but that doesn't mean that your 10-year will have to come down. And where it will
yeah,
come down is that if we get on the back of that another weak jobs report, then your 10-year will probably break 3 and go back to what is it, 380, 3.75.
yeah,
Yeah.
yeah. And your take on the metals after they
Um, building in a pause, but yeah, this is what I was saying this morning as well. I think gold, the fundamental reasons why it should be bid are still there. That's why we are still here. But the positioning may need to work off a bit of maybe over positioning into the Fed, and afterwards we will see what they tell us. Silver is still much more bid. It's still very bid, and that may be one because we have seen that demand come in higher and higher in silver. It's not before we break back below 41.5 that there is a bigger
yeah,
correction parts. For as long as we are above there, it's
good
just
level.
to stay bid.
Yeah,
Yeah,
that's a good level. Uh,
yeah.
what makes you think that positioning is too heavy? Is it COT? The position in gold you were just talking about.
Yeah, I mean, there's some in the numbers, but it's also the speed and the relentless of by which we've gone higher. And also the fact which time zones have been doing the moves. And yes, we have seen Asia, I think start of last week, joining the party again. But and we have seen those reports that Asian central banks and PBOC continue to buy gold. They have relaxed rules to keep it as well. But also other time zones, like the US, for instance, has for the past 2 weeks or so, has been a buyer of gold nearly every session that we saw in the US. And there is probably a bit more speculation in there than there would be if we see Asian time zone, for instance, And
Okay.
that's why I think we are we had that on silver as well. This like $1, $1.50 up and down, up and down, up and down, and then before we started to shoot again. We may be in the same kind of thing on gold until the FOMC at least, or until we see other data in the US. And I'm thinking again about the retail sales because they're expected to improve a little bit. But if they're coming very, very weak, that's going to be another little piece to the puzzle why stuff like gold can remain bid, you know.
Yeah, if we get a dollar turn at 97, that could be something too. I just wanted to point out, I've been talking about NVIDIA for a while since it peaked, and for some reason it's coming in sharply lower today, down about $3 on the opening. And look, we've had quite a few lower highs here.
Yeah,
And China,
China came out saying that they want to no, I don't think sue Nvidia, but they think they have the foundations to do more checking on Nvidia, etc. And
Yeah, it's
so
antitrust
they want to
laws.
promote their own
their
chips
own
and
chip,
stuff,
yeah.
of course, yeah.
Yeah. So we'll see. I mean, it's looking vulnerable to me, unless they turn it. It's going to fill this gap that it left. I still see a lot of confluence at 140. So I can't believe that the market is going to keep setting the indices, new consecutive contract highs if NVIDIA is going to trade down to even 160, not even down to 140. So, because it was a pretty close, tight correlation all the way up from April. And now the correlation has, broken down a little bit with the market, S&Ps and NASDAQ making new highs, but without NVIDIA. And this opening doesn't look good. We start closing under 72, I think there's lower levels coming in NVIDIA. So be careful. That's what I would say. And I talked about grains. They're all looking good. I know I've been the boy who cried wolf on them before. Uh, you know, if you've been listening to me for a while, but you look at something like this, the corn. I like it because I tell corny jokes. But this has been a tremendous run. The beans haven't been bad, and this is in the face that China hasn't bought 1 bushel of beans from us. They're buying it all from Brazil. And wheat last week they tried to take down for another new low, and it fought it and came back pretty good. And I think part of it's going to be Russia. I've read and seen guys say that Russia wants Odessa back. Okay, I don't know if you guys think peace is going to break out or not, but that's a major shipping area. And when the grains went crazy on the invasion, that was their worst fear, was that Ukraine wasn't going to be able to get their grains out, and that's when corn was 8, twice as much as it is now, and wheat was, 12, and that's more than twice of what it was now. So if Russia does take Odessa, maybe the fears that people had 3 years ago that never became reality could become reality. Plus, they're having drought conditions in the breadbasket in Ukraine. So I think this is an embryonic move. There's probably different ways to participate. You could buy fertilizer stocks, agriculture stocks. You don't have to buy that. And actually, they use natural gas in fertilizer. So, the being bullish nat gas, which is, I think, just in a pullback phase here. And I'm looking to add some time this week, but here's the action in nat gas. You had your first wave up, right? Nice wave. So it's already playing with the 50% fib. And this maybe we're not going to get down to 61.8. But, they use corn for energy too, ethanol, soybean oil for jet fuel. So grains are also kind of an energy play. So,
By the way, Trump is on True Social talking about China and basically gonna save TikTok. Just hitting the wires right now.
Oh, he's going to save it. Okay.
He calls it a certain company that young people in our country very much wanted to save TikTok. So
Oh,
yeah.
okay. All right.
Yeah.
TikTok. All right.
Great,
So,
great. Just yeah.
yeah.
Continue
Well,
to
yeah.
kill our youth. It's awesome. Can't wait. It's
Yeah,
awesome.
they do a lot a lot of productive things on TikTok.
Jesus
There are a lot,
Christmas.
yeah,
It's
there are a lot of businesses that started on TikTok that took
Oh
off.
yeah. I
You
mean,
know,
my
there's
my
good.
wife my wife takes TikTok as gospel, which is absolute horse crap. You know, where'd you see that? I saw it in TikTok. It's like, oh God, she sees everything on TikTok. Anyway,
All right, buddy.
I'm sure some of you guys can agree with me, and some of you guys are probably on TikTok and get it. So they do have a
Uh,
good algorithm. I'll give them that.
all right,
Uh,
I'm going to give you the charts, buddy.
all right. Well, I'll take over. So,
Okay.
yeah, if you guys didn't see that headline is right over here on the live Squawk feed. You can see it. You can read it if you want. But anyway, one of the big moves I talked about this on the week ahead video, and it was setting up perfectly. And
Oh
I
yeah, you
know,
did. Yeah. You
well,
called it
Sterling.
squeeze.
Yeah, exactly. I mean, Ryan, how bearish is everybody on Sterling? I mean, everybody. I don't think there's Sterling bulls out there. Wouldn't you agree?
No, you won't find many. I mean, I know a lot of us are trying to trade this breaking cable, but we're not buying the pound because everything's hunky dory over here.
Right, right.
It's a
But
tech
I mean,
trade.
how many people have been leaning on it, and it's just like it looked ripe for a rally. I mean, we're heading into the Fed this week. Something we've been talking about since last week. It's like, okay, the market's going to be rallying. We're at new all-time highs this morning. It's going to rally right into the Fed. I think the Fed is the day that, and I said also that one of my setups from this week is I am shorting the stock market on Wednesday. I don't know when Wednesday. And if you're in the trades room, you could obviously know exactly, where I'm entering or exiting. Like I just got long some sterling this morning. You can know exactly where I'm going to be shorting the S&P if you're in the Forex Analytics trades room. So, take advantage of the sale, do that. But like I said on the weekend video, there's at some point on Wednesday, maybe Thursday, depends on, how many 50 basis point cut votes we get. I'm going to be shorting the S&P. I think it's a buy the rumor, sell the news, and that's how I'm playing it. But it's leading us up into the S&P. Just I've been, hoping that everybody would price in 50 basis points and it'd get the market excited. It's exactly happening the way we talked about it last week. We discussed this a lot last week right here on this show. Let the market get excited about lower inflation. Keep rip right into Wednesday. The higher the better. It's like a cliff diver, Dale.
Yeah.
If you're a cliff diver, you want to get up as high as possible to jump. And I feel that the stock market is doing that right now. We're currently just climbing up the side of a hill or of a cliff, trying to get as high as we possibly can get to get the biggest thrill on a nosedive. And that's exactly what the market's doing. Where you can see we're at all-time highs, printing all-time highs at this moment, despite this Nvidia news, whatever. The market's running with it. So
Where's it going to nosedive to?
what's that?
Where's it going to nosedive to?
I don't know. I could really give a shit. I mean, if I get short and I can get my stops to break even, I plan on keeping it for a couple of weeks. You know what I mean? I think we'll have a situation where we could probably pull back to at least 61.50. See how we react here, and it depends how much seasonals play in to, once we get into, our 10-year earnings calls with companies, whenever they decide to report earnings, which could be, next decade or so. Maybe we'll just play short until, companies they have 100-year, reports, whatever, President Trump wants. I mean, I'm being sarcastic obviously now. So I don't know. I think earnings season is going to be a kind of a big deal. And I think the jobs reports are going to end up being a big deal as well. But I just want to get short up somewhere up in this neighborhood. It's been kind of like my master plan. I just don't know how far I'm gonna, how far we're gonna go, and how we're gonna play it. But that's how I'm gonna be playing it. So what are you gonna do this week, Ryan? How are you gonna position yourself this week in the markets?
Well, I'm already sort of a bit positioned. I'm still short dollar yen. I'm going to happy to run that into the Fed, see what that gives me. I think the path of least resistance is still down for that one. But obviously we've got the elections to come and whatnot in Japan. Yeah, this dollar mex gonna sit on that one, see if we can keep going on there, get down to maybe the 1820s, 1818. Got a big fib down there, the 61.8. So I'm looking at that one. But for a fresh trade, I'm looking at a dip in dollar CAD. I think whether it comes before, during, after the Fed or BOC, I'm looking for maybe picking up a dip there because I think the CAD's going to show a bit weaker than the dollar once the Fed's done.
Dale, you know how much I hate this. I'm going to do it for us anyway. I absolutely 100% hate this, but I've been drawing this every day this last week for our traders on the morning edge. I hate head and shoulder patterns when you're into downtrend because it's a reversal pattern look.
Yeah.
But I mean, it is perfect. I mean, I hate to say it. It does. If you just block out everything to the left, it is a really beautiful head and shoulder pattern. So, Ryan, maybe you do get a move back down to 137 and change.
What does it measure? Just out of new lows or like
It'd be fresh
136?
lows. It'd be fresh lows. Yeah.
Okay.
You guys know, I don't like, they're not continuation patterns. So
Okay.
I don't like it, but that doesn't mean just because I don't like it, it doesn't mean that everybody's not
It
trading
can't
it.
work. Yeah.
Yeah. I mean, the thing about technical analysis and like a lot of if you're a by the book, I'm like if I go play blackjack in a casino, I literally play by the book. And if I have some jackass next to me hitting on 16s, I'll actually get up and leave, the table. I mean, I will. And so this is the same type of thing. It by the book technical analysis, head and shoulder patterns are reversal patterns, not continuation patterns. But the reason why it's worked so well and over the last 20 years is because it's the invisible hand of the Fed that has just kept stock markets going up and up and up and up. And it's not just the Fed, it's all other central banks too. So you could do an inverted head and shoulder pattern as a bullish setup, and it works just because stocks continue to go up. And so anyway, but by the book, no, you shouldn't be playing it. But it doesn't mean it won't work. I mean, it's been working like that a lot. Anyway, Kman, how are you going to be setting up for this week?
I'm a bit short dollars against Norway, against MEX, against Aussie, against sterling now as well. But the sterling is really a very short-term play. So I'm a little short dollars, but just because, yeah, the MEX is looking good. Norwegian kroner, we have the Norges Bank this week. It's not going to say a 50-50. It's more like 60 for a 25 BPs cut and 40 for a hold, but the hold would be a bit of a surprise, but there's other factors supporting the Norwegian kroner right now. We're also on a very big level in the dollar Norway right now. This is the 50% of the 2021-2025 rally. So if it breaks, we could end the week lower. But I'm not sure if I'm going to keep the dollar side open or flip into Euro Norway or so. But yeah, the Norway I like
You
it.
see how big this Swedish krona, like this trend line goes all the way back to
Yeah,
2014.
we're on there too, on that one too. But I don't really like to play Swedish krona too much. It's an accelerated euro. So do you have confidence in the euro? That's the big question. So
Right.
not a huge fan. Unless if I would have been like really bullish on the euro, I would have sold dollar stocky. But I'm not extremely bullish on the
You know,
euro.
one of the things that you've been really, really bullish on, and this is before me because I wasn't a believer that was going to break, is the Aussie. You've been touting this one for the last couple of weeks, and I joined on the I jumped on the Aussie bandwagon with you last week. I was, I felt late, but even though I'm long from the, down here, I
Mm.
still feel that I late because you've been on it for the last several weeks. So kudos to you, Kman. How
Yeah.
far do you think this Aussie's going to
Well,
carry?
we need to. There is a trend line coming in around here from 2021, if I'm not mistaken, as well. Um, if this can hold 66, 60, 65 through everything, no, well, not especially hold, but if we are above, let's say after the FOMC, I think then we can go for another look higher.
Look at that weekly I pointed out last year, the weekly moving average that you have up there, Blake. It's stalling right there at the
Yeah,
Where
but
it's
weekly
not moving, yeah.
200. Yeah.
But
but I mean,
but we
if
are
it
up.
goes, it's going to be very positive, right?
Yeah,
Yeah.
I mean, and I was doing the trade-off show with Chris Weston last week, and he's just like, look, we have political stability, the economy is doing well, a lot of green shoots. I mean, he obviously lives in Australia, so he's got his. Yeah, I don't think it's more of a bias, but he's got a more of a boots on the ground feel, and he understands the central bank really well. He's just like, Australia is, there's a lot going on and a lot of positive flows. And I mean, we are in breakout territory now. Some of you guys could, take this trend line and go, well, Blake, aren't we on it right now? And I guess you could argue that, but then you're missing out on all these other wicks that we just, that has held us down for like, the last 10 years. So I don't know. It looks bullish. Again, I'm long. I'm kind of I'm playing it alongside. I won't be doing this on Wednesday. I'll be out before Wednesday for sure. So it is but it is something that I think you need to pay attention. As K-Man said, what happens post FOMC is going to be really critical. Guys, we were, just I'm gonna pass it back over to Dale. I know he's got Patrick here, to take over, but make sure you take advantage of our pricing. We're actually going to be pulling down our sale. We've had it running through the end of summer. We actually have like two traders that I haven't seen them for a month. They're back in our chat rooms. One of them just got back from Samos, Greece. He'd been there for 2 weeks. One of our UK based traders, Mark, he just came back. He'd been gone for like a month. And now that we've got most traders are back in the saddle, we're going to be pulling down the sale. So we're probably going to let it run through the week and we're going to be pulling it. So if you want to lock in 40% off prices, this is our prices from 2019. Lock it in because when we move back up the prices, you'll be locked in, but everybody else would be paying $150 a month. So take advantage of it right now. And remember, we go month to month. So, um, you know, lock in your low prices. All right.
The window of opportunity is closing, so pull your
Yeah,
head in.
that's
Don't
right.
don't be looking out the window with your head out because it's closing. Make a move.
That's
It's
right.
like a guillotine.
That like a guillotine. And if you want to
Yeah.
be short with, the dollar mex with me, at 1850 or Kman or Ryan or all of us that are short in the dollar mex from last week, jump in our chat room. You know exactly where we position ourselves in the markets. All right, guys. I'm gonna pass it back over to you, Dale. Ryan,
Thanks,
Kman.
Blake.
Yeah, thanks for getting us prepared on the Flow Show. As always,
Yeah.
I try to listen to it every morning. And Dale, thanks for guiding us every day, bud.
All right. Thank you, Blake and K-Man. Thank you, buddy. Ryan, always good to
Cheers,
hear you
mate.
guys. Always good
Thank
to hear
you.
what you guys are thinking into a big week. Appreciate it. Thank you. And now I have a chance to bring in a guy who was way ahead of the curve on a change of investment flows. Patrick and his partner, Kevin Wadsworth, have been talking about this with the gold and silver market and the shares. Pointed out the Dow gold ratio breaking down many months ago. And just want to bring you on, Patrick, and say congratulations for sticking to your guns all this time. I mean, there were sell-offs. It took a lot of patience at times, but patience pays, doesn't it, my trading warrior brother?
Hi, Dale.
Hey,
Thanks for the
buddy.
intro.
Yeah, it's
Yeah, look,
true.
I'm not
It's
about sticking to your guns. That could be dangerous. It's like sticking to your guns in the sense that if ever you have a thesis, but then the price action does not
okay.
violates it, then you should not stick to your guns. You should say, hey, hold on, my trading framework is telling me that something's wrong. It might maybe my long-term roadmap is fine, but you know how it is sometimes. You have long-term roadmap, but the market likes taking detours, right? It likes, oh, look, that correction
Exactly.
lasts a little longer, and then there's so you got to always adapt to the market conditions, the market price.
So
But
that
yeah, look,
detours reminds me of how people call uh, traders who don't hold gold for, months at a time, tourists. So right, so you're talking about a detour, and
yeah,
they're called tourists, and they're detoured. I know that I was in and out. I was bearish. I was bullish. Thankfully, I turned at I think it was 3,300 before this melt up here. So let's see some charts,
yeah, let's
and
do it.
are
Let's do
are
it.
things starting to look like you're talking about? Is there potential for a detour up here? What are you telling your subscribers?
Well, look, the miners is like I did a post on Twitter and people starting to get upset at me. And sometimes I don't want to take that as a contrarian
Yeah,
was it
they
like
always,
thing
yeah,
like
yeah,
in a nutshell, you don't want to but when people start getting upset at me because look, I didn't put a bearish well, okay, I said that there's the miners are
parabolic.
approaching a correction period. And I'll zoom out there. Okay, let's do a little history about the miners there. I remove all my drawings. Okay,
I
here,
used
guys, I have
I used to
the
trade ASA. Now I pay more attention to Newmont and GDX.
yeah,
But
but
okay,
it's
yeah,
fine. Well, I
yeah,
put the ASA because it's just we have data from the previous two bull eras, right? We have the entire 2000 run and we have the
yeah,
entire 70s run,
yeah,
and so that's why I use it. But if I put a correlation returns coefficient, you could put JDX practically the same. You could put one of the
yeah.
big miners practically the same, right? It gives you additional data to go back, and I'll show you this analog. Where's my analog tool? It's up here. No, goodness gracious, here. Where's my analog line?
My best
Oh,
trade
here.
was Patrick. I'm supposed to be like a trader using leverages and that. But you know what my best trade was? Buying physical silver at $20
Oh, goodness.
because
Yeah.
because it was too heavy to lift and try and pack it up and sell it. It was so inconvenient to sell that it forced me to hold it.
Well, you know what I
You
tell
know?
people? That's like people saying, the Bitcoin returns since inception, they put these crazy returns, 10,000, 100,000 gains. But practically the only way you could hold it all the way that is if you lost your keys and 15 years later you found your keys again to your Bitcoin and then you sold it. Because I had some friends buy at $5. Guess what happened at 1,000? They sold. They were up
Yeah,
whatever
yeah,
20x. They
200
wanted to buy a
times.
car, a
Yeah,
house.
yeah,
They sold
yeah,
that stuff. Nobody
yeah.
keeps it. Even like stocks for over 50 years. Who holds that? You have to lose your IBM certificates that you bought in the 60s. You lost them, then you find them today, then you sell them. But along the way,
Or
we have
or
to
there
live,
is
right?
there is a fairy tale who would be a good position trader. The guy's name is Rip Van Winkle. Ever hear of the guy? Ever hear of that guy?
He's dead.
No, he Rip Van Winkle. He'd take 20-year naps.
Oh goodness. Well,
Yeah,
that's
it's
good.
a fairy tale. Rip Van Winkle. Check it out.
Well,
So anyway,
he'd be good.
uh,
Yeah.
yeah,
Look
he'd
at
be a good trader.
look at these fractals here. Here I use my fractals tool. So here's the 70s bull market for the miners, okay? But the issue is when people have they look at past performance, they say, oh, the miners did. So let's say I'm going to
Right.
put my measuring tool. They did, check this out. They did the price range. They did, let's say from top to bottom. Oh, they did the 10x. They did 1,000%. Fine.
Yeah.
But people, they're subconscious. Once you're bullish a position, you have a hard time seeing the less bullish evidence. Look at these huge drawdowns here in the 70s. Okay, here before it went down 60%
Yeah.
about. Here it went down whatever, 70%. Here it went down 66%. So there's these huge drawdowns. And check out this fractal. I used to go crazy, Dell, with fractals. I don't trade off fractals, but I like using them sometimes to show people without bias, the ups and downs
Yeah.
of the stock. So here's the 70s fractal brought over to the 2000s. It doesn't, the beginning matched very well, then the correction, the 70, but then after that went up and then you had another correction. So it's not perfect for the 2000s, the fractal.
Right.
But if
Right.
I put it today, and I'll just adjust it a little bit to condense it there. Just, it's not about the actual correlation, the price. I want to show you
Similar pattern.
yes, it's all about market psychology because the
Yeah.
exuberant moves up and the miners gets everybody crazy, like
Yeah.
gold feverish. And but then the corrections for the miners historically, look at these. I showed you, like even in the 2000s, we had a
Yeah.
huge correction here, 54%. We had another one
Yeah.
here, 30%. The corrections are huge in the miners.
They
And we've
are.
even, and people say it's different this time. Well, even here, recent history, we had a 55% correction right there, right? There's huge corrections in miners, make no doubt about it. When it corrects hard.
Did you look at these corrections to see if they were accompanied by corrections in risk too, S&Ps, that the miners being a stock, and we know how they underperformed for all these years
Yes.
until the last couple of years, could risk off be part of the reason that we might get a correction in gold?
Yes. I'll
Because
show
they
you.
rally together, really, gold's been a risk on trade.
Yeah.
It's not been a risk off trade, right?
No, it's one of the rare, I think it's never happened before where SPX and gold and the miners, everything's in a bull market there without, it's like,
The everything bubble,
hey,
Bitcoin,
well,
everything,
well,
everything.
well, what else are you going to call it? Seriously, I was there and I said, this is, it's not supposed to happen this way. It's an everything bubble. Yeah. To some extent, you could 100% put that label when these competing asset classes. So the ratio of, I don't want to, I want to finish this point with the miners, but the ratio of gold versus SPX has been going sideways for years now with both asset classes going up. So yeah, it's I don't know. I still think there's something's going to give. The stock market will falter, but yeah, for
Yeah,
now it's everything bubble. So here's
yeah,
the miners, just to give some people some. And I did this post for the members recently there about all this analog replay. So we're approaching. So when I say approaching, we're approaching an area where the miners are going to peak. They're going to peak. Look at the distance from moving average here. Here is at the bottom pane, guys, is the distance from that red line. So this is how stretched I am historically from
yeah,
the
moving
36
average.
month moving average. Statistically, I spend more time below that line than above, statistically. So
Yeah,
you got to say that there will be a reversion to mean eventually, but because it's a moving average, the mean is always increasing, right? So there's, a
yeah,
correction is price and or time. So it doesn't mean the price plummets, but it's telling you that eventually the price will catch up to the moving average. And because of the nature of the ASA, the miners, it often it's gonna like I'm gonna remove these things here. It's the miners like really falling there hard there through it. But you don't people get upset. Don't, but guys, it's all fine as long as look, maybe here, it's not quite as long as the distance from moving average stays above this line here, it's all good, guys. It's all good. But it's all good, but you should see that there is no low risk entry here, an equivalent low risk
yeah,
entry.
right.
They're just not there. You had to buy here,
Yeah,
maybe here. There was a short-lived one. You don't here. You see those low risk entries
yeah,
here. Look what the price happens after this. You start exploding away from the moving average. You could wait for some classical TA here. I'll put a breakout line. So you could combine distance from moving average exploding. Here was a full reset.
yeah.
Here's another entry here. So those are the entries. But look at that. How could I objectively tell you, Dale, it's time to go long miners.
Yeah, you
How could I
can't
tell
do
you
that.
that? I can't tell you.
You
On
can't.
this
It's
time
like a
frame,
FOMO. It's a FOMO trade
yes,
now.
and look at this. On the 2-month chart, it's stretched. On the 2-month chart, it is stretched. On the quarterly chart, it is crazy stretched on the quarterly
Yeah,
chart. On the 6
yeah.
month chart, super stretched. Like what? And even on the yearly chart, it is stretched. Look how
Third
there's
drive.
yeah, oh yeah, oh yes. I know
Let me
you
ask
like
you
that.
this. Let me ask you this, Patrick. When you get to markets that might put a hindrance on this move and create a correction, the two to come to mind for me would be yields not going as low and maybe even beginning to climb again, no matter what the Fed is doing, and that the dollar may have already bottomed. I know, I mean, the whole world is bearish. The dollar is still. And I could see how they can make a case for a new low at 95. But what if the dollar's bottoming here? Is there between those two instruments, do you see anything that could be a headwind for the metals up
Well,
here?
okay, here I'll show you a few examples there.
I'm sorry, I didn't mean to exasperate you.
No, it's fine. No, I'm happy there. You always I'm
Huh?
exasperating because
Make you
I'm
think?
yeah. There's so much stuff there. It's like I wish we had more than 30 minutes there to talk about this. Maybe one day we
Okay,
should make a super session. Here I
okay,
put the unemployment rate at the bottom, guys. It's the business cycle. It doesn't always play out this way, but here the miners, when the unemployment rate was going upwards, exploding upwards, it was putting its top. You could kind of say maybe the miners they front run this economic turmoil that's going to happen. The maybe
yeah,
the guy whatever the miners love trending upwards. See higher lows, higher highs for the miners, higher lows, higher highs for the unemployment rate. Same thing in the 2000s, higher lows, higher highs. The miners go up. But here in the early 70s, miners front ran probably this explosion in unemployment rate. They peaked as soon as the employment rate started exploding. They peaked. It did it a second time here. They peaked right before the second explosion. But this one here, here's a GFC one. This one's the exception here. Here's a GFC unemployment rate exploding upwards. The miners they put in their top, probably front running that. And now the
yeah,
unemployment rate, we know it just broke out there. Check it out. It just broke out last reading. Look at this breakout
yeah.
here, Dale.
Okay, yeah.
So unemployment rate is trending upwards. It just consolidated for a few months, many months, and now it broke out. So I have a target of about close to 4.8. For me, the unemployment is going at least to 4.8 on this run.
Interesting.
So let's see what happens to the miners. But when you take the miners that they are super stretched from the moving average, and there's this precedent that the GFC or even the early 70s where unemployment rate starts going up and then the miners they take a little break. There's also gold. My goodness, it's like gold. Let me show you gold there. And we could touch back on the market. Even gold is getting up there. And I know the bullish narratives they come out. I know the most bullish narratives, Dale, they come out when the price is this stretch. The
Yeah.
central banks, whatever, like bricks. I don't know.
Yeah.
There's so many bullish narratives. So I'm not saying again, guys, don't construe this as I'm bearish. It's so weird. When the environment is so bullish, everybody's so happy that even if you put out some not bearish, not bearish. I'm
No,
not saying I'm going short.
your objectives aren't high enough.
Yes,
You're
they're
too
not high enough.
conservative. It's
Yes, I'm
going much
conservative.
higher. Yeah.
Yeah, I'm putting out less bullish roadmap. People they construe that as being bearish. What do you mean? It's like I'm not giving them the confirmation bias they're seeking,
Yeah.
equivalent to the FOMO they're feeling, and now they're getting upset because I'm putting some reality out there, and I have to show the reality. Like
What
I'm not.
which crowd protests more loudly? The holdals or the gold bulls?
Well, which one was the first bulls?
The holdals, the Bitcoin bulls.
Oh goodness.
Yeah.
Look,
Who do
they're
you think's
both.
more
Yeah,
emotional about saying anything
probably
that
the
isn't?
the Bitcoiners. I'd say the Bitcoiners because there's more of a cult. It's
Oh yeah,
very, very
okay.
culty.
Yeah.
But
Okay.
even
It's,
like I think any instrument, like you could be a Tesla bull, Tesla when
yeah. Oh, yeah. They're all cults.
they're all
Everything's a
called
cult.
because it's the price that goes up. It's like drugs. It's in the air. It's like it's feeding you there. That you look at your bank account and it's going up. You can do no wrong, and you want
Yeah.
it. You want the party to continue. And if anybody
Yeah.
says anything to the contrary, not somebody saying short it. Like I'm not saying short it. 100%. I know this is an uptrend. Like because I'm saying it's stretch and there's no equivalent low risk entry. Like the low risk entry is here, here. After here maybe a reset in momentum because you're not telling people that there is a low risk entry. It's not means you're bearish, guys. Look, it's in an uptrend. I can't. I love this uptrend. It's beautiful.
Yeah.
So
So you trail a stop under that
yeah,
line.
yeah.
Yeah. Maybe even take some profits. It's not illegal.
It's not
And
legal. Yeah.
yeah, it's not illegal to take profits. In fact, they're not profits till you take them.
Look, I like talking to you because you see the wisdom behind all this stuff because you've been around the block. There's, but you see these errors getting repeated and repeated by people who
Yeah.
just enter based on pure fundamentals, but then the chart starts, showing signs that it could be a profit-taking zone. Or if you don't want to take profits, fine. But if ever you lose that rising support line here, at least
Yeah.
at that stage, me, I would 100% start taking profits here. There, if any moment there, look at this beautiful line. The gold chart is one of the best charts to chart.
Classic.
You've heard this,
Classic.
right? It's like,
Yeah. It's a good technical chart.
look at this line here.
Technical.
And the
Yeah.
signals are clean. Look at that. 1, 2, 3, 4. This is textbook stuff there. So if ever
Well, you
there's an
want
up,
to, okay. I mean, I think we have your your narrative on the gold. Is it similar in silver?
so silver's got more, oh my goodness,
Run,
it's moved so fast. It moves so
more
fast.
of a
Every time.
runway? It has still a larger runway.
Yeah, but it's catching up there. My goodness, it's doing its look from a classical TA. I'm pretty sure
Yeah.
that we've even if I take my greedy look at that, we're already here. That one's
Yeah.
reached. Maybe
Yeah.
here maybe this is a type of aggressive pull flag. Uh, we're getting maybe a little bit here. I don't know. We're getting it, I
Look
think
how
there's
far above the clouds we are.
yeah, the cloud. Look, I think silver did it's catching up there to gold on this time frame on the monthly
Yeah.
chart for this move.
Yeah.
Again, this would be my line in the sand. This one here, the bottom, guys. If ever we lose that rising support line because we're stretched, I would 100% call it uh, correction starting. The low risk entry is not here. You missed it. The low risk entries, guys, again,
Yeah.
they're on the here, maybe here. I don't like this one as much, but I like the ones off big bases. This one here. So
Yeah. Why couldn't we see 34 again?
34. Yeah, why not? Why not?
That's a modest,
Look,
normal correction.
goodness, it
But
could be.
people will get hammered if they're getting long today and
Yeah,
it goes
exactly.
34,
Well,
right?
that look here, even a regular correction here. Look in the bull market in the 2000s, it corrected
Yeah.
27% on a monthly close basis. That brings you back down. Let's say we reach 48. That brings you back down to 34, 33.
Oh, okay. There's some confluence.
Yeah, yeah. So it's easy. It's all about um, yeah, these about your entry. It's like I told my girlfriend that it's or anybody when you buy a house, you got to buy cheap. When the deal is made at the entry, you got to. I don't want to say cheap, but you got to buy at the before it explodes. Like as it's exploding, that's where you want to buy because the further you buy up and FOMO because you see your
Yeah.
friends that are making a bunch
Yeah.
of money, you're getting trapped because by the time it reaches let's say 48 you're not going to make as much profits as your friends. You'll be upset. In your head, you say, well, I want at least a one bagger. And then after that, if it starts correcting, you're gonna be underwater really fast because you didn't buy like
Yeah.
right at the breakout of a resistance, right? And now you're in
Yeah.
no man's land. You're halfway towards a target, and you're kind of trapped there. It's the worst place to be. People who bought just at the breakout, they had a lot of lee room, so their emotional capital doesn't get destroyed as fast because even if there's a 20% pullback, but they're 100% up, they'll be able to ride that out there. They'll have some emotional fortitude left in the reservoir. But if you buy in FOMO, look, what am I going to tell you again? Look at the distance from moving average. Look at that. Even you could do
Yeah.
TA on this stuff. Here, here. Let me do
Yeah.
another line. You could do pull flags on these things. There's still gas tank, 100%. I think there's still gas tank left in silver,
Okay.
but more than gold there. Like
Yeah.
there's some room there for silver there to do a nice little move there. It's still there for
Okay.
100%.
Okay. Do you have a dollar view? We could wrap it with it.
That the DXY.
Yeah. I know
Uh,
you don't you pay attention to it being precious metal guy. I know you look at everything. The dollar's a little confusing, isn't it? It's
well,
just chop
it's essentially, yeah. The DXY
breakdown.
is just like the Euro USD. So right now, and this
Yeah.
tracks a lot even the gold silver ratio. I could overlay the gold silver
It
ratio.
does. Yeah, it does.
XAU.
To me, it looks like there is possibility that the gold silver ratio is trying to put in some kind of low
Yeah,
here. But
yeah.
go ahead. Okay.
Not,
What's a
not
gold silver? Yeah,
let's see.
breakdowns.
Not always, but the gold silver ratio. Yeah, you got to be careful with this correlation stuff. But there recently it has. You see here at the bottom here, they do kind of track each other. So the gold to silver
Yeah,
ratio, but not always. So you got to be careful with these correlations here. They can trend together. That's why people say, gold has to go up. The DXY goes down, or gold can go up with the DXY, which is false. In the 2000s, there were years that gold and the DXY went up together. So
yeah,
you got to be really
they
careful.
can.
Yeah, yeah, of
Yeah,
course. Yeah, yeah, they did it a whole bunch of times here. So, so the
yeah,
DXY, let me do an objective analysis for you. Remove drawings. So right now it's 100%. I think I was bullish a little while back here on this breakout, but it failed. Now it's
yeah.
falling. So that looks like a bear flag below breakout line. Yeah. So for right now, the bias is bearish for the US
Okay. It
dollar.
would
Maybe
have
a
to
little bit here. Yeah.
yeah, it would have to reclaim that 100 level.
Yeah, 100%. Anything up below
Because
100.
sentiment is hugely bearish to dollar.
Oh yeah, I did not.
Hugely bearish, the most bearish in 20 years.
Goodness. Well, that's fine,
That's what I'm saying.
but as you could use that as contrarian info once the price starts going back here, or you
Yeah,
need
if it
a little
goes
proof.
back, yeah, if it goes back above, that could just be an ABC down to the levels we're at.
It
It
could go,
looks like a breakdown,
maybe it's
but
gonna
look
go,
at it. Yeah,
maybe it's gonna retest here. Maybe here it's gonna be the bottom there.
maybe.
One, one,
Yeah,
two, three.
I'm
Yeah,
thinking 97.
yeah, yeah. Who knows? Yeah.
Otherwise, yeah. So, I mean, I think we'll see this week. You have what are your expectations from the Fed, and does it matter?
Cut. Well,
Okay.
I'll show you why there. This is super simple. Let me check this out. US 2 year yields. So here's the 2 year yields. Remove all indicators. I'm going to
Yeah,
overlay the
yeah,
Fed fund rate, same percentage scales. So here's the 2 year yields.
yeah,
Historically,
yeah,
the Fed fund rate is the thin line.
yeah,
And they always reconnect eventually. So the market, you see that the Fed started dropping here, but then after that, you see the market's telling the Fed that there's a catch up there. They're behind the
yeah.
curve now. See,
Right.
it would have to drop like 1% there or more just to catch up there to where the market's at there. There's always a reconnect eventually. You'll see there on the way down. The Fed always reconnects and undershoots. You see here, it undershoots, and then the market's going to tell you when it's time to go back up. So people thinking the rates are going to go up, for me, doesn't make sense because the market's telling us that the rates aren't going up. The market, right? Got to listen to the market. My goodness. So they're probably um, the unemployment rate going up, the non-farm payrolls going down, the U.S. initial claims also starting to break out. My goodness, it's like it's screaming in your face that the business cycle is rolling over, right? It's like, so
Yeah,
they have to cut.
yeah. Do you think the Fed is going to be a panacea for it?
No, no, no. They're just let the market do what the market does. The Fed, if they cut when markets super stretched from their moving averages and they cut for the wrong reasons, they cut because the business cycle is really rolling over. And how bad is it rolling over? I don't know. Is it going to be a GFC type of thing, whatever? Then eventually the markets they're going to price that in. But if they don't, then who cares if the business cycle rolls over and we go into great recession? If the stock market doesn't roll over, what do you want me to do? I can't,
Yeah.
can't do
Yeah.
anything about it.
Another great interview, Patrick.
Thanks, Dale. You're the best,
Yeah.
Dale. You bring out the
I
best in me with all these good questions. I could talk to you for hours there.
All right. Well, I'll send you my phone number. Call me anytime. Anyway, I look. Best way for people to follow your work. These guys have a great YouTube channel, and how can they get involved with you? You want to put
Yes.
your website up?
Sure. Well, look, I'll just say it there. Bad Charts One on Twitter. We have the website northstarbadcharts.com. Maybe your viewers could. We have a discount code, summer25, if they want to use it, could get 50% off. But that's all we do there. Me and Kevin, we
Yeah.
just that's what we do. Charts there. We just dream and think of charts all the time.
All right. Well, these guys were way ahead of the curve, and as you can tell from Patrick, he knows that money management, risk management's as or more important than being right on a forecast.
Correct.
So he's a pro. So I'll talk to you down the road, buddy. My trading
Yes.
warrior brother, Patrick Kareem, follow him at Bad Charts One and go check out their website and have a great fall trading season coming up here, Patrick. I'll talk to you November-ish.
Yes.
Unless you can't take it, call
No,
me
no.
anytime. All right, buddy.
Take care.
All right. Patrick Kareem, everyone. Hope you guys have a great day today. Good hunting. Big week waiting for the Fed. Tom Petty says the waiting is the hardest part. And he must have been a trader. Made all that money as a rock star. I'm sure he took a few shots. But what we have to do is not just count our pips, count our blessings. See you guys tomorrow for Turnaround Tuesday. Take Blake up on the offer before it goes away and rise to the level of traders that are better than you. And that's a wrap for me, everyone. Take it easy. You're welcome. People are thanking you, Patrick. See you, Laura. Cheers. Adios.